Hello everybody, welcome to Cryptonomy. I'm Mo. I'm a computer and data scientist. I was able to turn the cycle a small crypto portfolio into six figures. So if you're interested in learning my strategies and how I was able to become a successful market speculator and some of the mistakes I did along the way, then maybe try watching this video. And then if you enjoy it, please like and subscribe. Before we start, nothing that is said in this channel is financial advice. It's for educational purposes only. Please make sure you do your own research and analysis before making any financial decisions, right? So I do suggest maybe watching some other channels and maybe looking at the chart yourself to confirm some of the ideas or expand them, right? Today, what we're going to focus on is the Fibonacci ascending channel that has been playing out for Bitcoin for the past, right, the whole cycle. So 3 years, right? And it did show a lot of things. I was able to notice that we may be heading into a bear market right when we started to break that red line, right? For example, if you look at that, you can see we were able to hold the red fib line during all bounces, right? Here, here, there, there, and thus, by the way, is 0.236. And how you can draw the channels, basically, just do that to here and put it up like that, right? And then you get this nice channel. And why I like it is because it does actually tell the story of the price. So it does act as major resistance and support levels. And we failed multiple times to break out of the channel. Right, one here and one here. I think this could be the reason that showed weakness, and you would have been able to guess maybe there wouldn't be an euphoria zone this cycle. So what this can tell us is this is basically the bull market support line. Every time we had touched it, we bounced, and pretty aggressively, right? Right here we touched it and bounced pretty aggressively. You can see here right as well and here as well. Except this one time when we actually went below it and we still bounced and continued higher. Right now we have not only broken this red level here, the 0.236, but the support line in general. So the thing that goes from here to there, right? So we're attempting to break it down. What I would see, what I want to see to confirm the bear market, usually the most obvious signs when they start to show themselves is usually late to be like, yeah, it's a bear market. Everybody knows that it's a bear market by then, right? But at least we know that these things are happening. What I would like to see to officially confirm the bear market, of course, even if we say that, we could just have a rally that melt faces, but to have a better statistical approach and probability on our side, it's good to see a kind of decline there, a retest, and maybe trend continuation. That would be a nice way to play, right? Or maybe some resistance here, you bounce up and then you go down, retest, and continue down. Something like that would be nice to see for the bears, right? Another thing that is intriguing is that we're actually at the same level. This bull market support line, the gray one, the initial one, and the 100-week SMA is around the same level, right? And why would it be logical to see a short-term bounce here, at least a local one before we head lower, is not only because of that line that is acting as resistance now and maybe even support a little bit to bounce, but you're getting this one as well, right? The 100-week SMA. I'm going to also pull out the 200-week SMA because it does show a nice story. They all play together, the 50, 100, and 200-week SMAs. If we go analyze previous bear market, what you see is sometimes we go down, we get a bounce on the 50-week SMA, and then we get a correction between the 150-week SMAs. We bounce, we sometimes touch the top or the bottom or both, but we do play around there and we do get a bounce and then we continue down. And usually as well, once we break the 100-week SMA, that's when everybody knows it's a bear market, right? And that's when you get the largest correction. And that plays out times and time and time again. So for all the people who are considering shorting, I would suggest maybe looking at that area once we do that rally, right? For anybody that has some investments and they want to exit at a better price, I would say DCA slowly and watch the price. If it does form some kind of higher highs or bullish structure, then that's a good exit point. And also for anyways in general, we should know that there could be a bounce, so we don't get caught up buying again and at the top of the bounce and we get the hardest part of the correction, right? Of course, not financial advice, education purpose only ideas. I hope you can agree on me with some, and if you feel like anything might be off, please leave a comment. I'll study it, look at it, and maybe I'll include it in some video, right? Now, if we go look at previous cycles as well, we do see a similar structure playing out. We get a bounce at the 50-week SMA, we break below it, and then we play between the 150-week SMA. And here, as you can see, we did not hit here, but we bounced here, and then we just crushed it right here. And when that crash came, obviously it was severe. It was the hardest part of the crash, I think. That crash was, I think, 51%. I'm not sure if you can see it, but it's around, yeah, 50%. Here it was around, that's also scary, around 60%. So the crash from there to there usually is 50 to 60%, which is not small, right? Let's see if the first Bitcoin cycle also had a similar structure. The 50-week, bounce, break below it, play around it, rally. We had not touched the top. We only played along the bottom, and then we had a severe crash, right? And that crash usually marks the bottom after that little swoop right there. And if we see the decline from the top to the bottom of this move, is around 66%. So it's around 50, 60 to 66%. It's not small. It's not small. So it's very interesting to see that the same thing is kind of playing out. But here, what confusing me is we have only seen a slight bounce, right? Maybe we can go to the daily, we can see it better. Oh no, switch to daily. Right here, what we had, just like we barely touched it and then we rallied a little bit and we just crushed under it, right? That was pretty quick, to be honest, right? Usually we do form some time above it, but I guess things are going pretty fast now. So that's here. I do see us maybe consolidating or trying, at least attempting to reach the top again before having the most severe correction. Of course, nobody has a crystal ball. Nobody knows what's going to happen, right? But that is one scenario with a probabilistic chance of happening. We don't know what's that probabilistic chance, but it's definitely something to consider, right? Another thing I want to mention, maybe just before we close this video, is this drop is around 36%, right? Now, if we go to the previous cycle and analyze the average drop, right, during that time, it's around 35 to 45%. So it is time for a correction, right? If you go from here to here, that's around, yeah, 38%. And then you got kind of a relief rally here of 23%. And then you went down for around 37%. Then we went up for around 40%, which was nice. Down, 46, up, 24, and down, 44, up, 36, and finally down around 24. But if you want to measure it here, then it's 35. So looking at that, we are between 35 and 45% previous cycle, right? Right now we're at 36 is a time where we are within the range, right? And we've just broken the bullish Fib channel, the last line of resistance. We are currently hovering above the 100-week SMA, and all those may correspond to suggesting we might be getting the bulls a little bit relieved and the bears a little bit punished. I hope you enjoyed the video. If you liked it, please do drop a like and subscribe, and I'll see you on the next one. Thank you.